Good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Tuesday, October 2nd, 2018. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at DanRusso_CMT. Also on Stock Twits under the same handle, PowerFeed TV. Brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and Stock Charts TV. Sign up to receive Chaikin PowerFeed for free. Getting an email every morning. You can follow along with this show if you head over to www.chaikinanalytics.com/PowerFeed TV. So U.S. equities were mostly higher in Monday's trading, with commodity sectors and industrials leading. The bond proxies and consumer discretionary were the laggards. Treasuries were weaker, with the curve steepening, and the dollar was stronger against both the euro and the yen. Canadian dollar saw some big gains after the revamped NAFTA agreement went into place over the weekend. Gold finished down 40 basis points and oil was higher, with WTI settling up 2.8% on the day. Breadth on the New York Stock Exchange was negative 1.5 to 1. Breadth on the NASDAQ was worse at negative 1.9 to 1. So your outperformers were energy, materials, industrials, healthcare, and tech, while your underperformers were the REITs, utilities, discretionary, comm services, consumer staples, as well as financials. And as we get to the desk this morning, S&P futures are down 30 basis points after we did turn in that generally mixed to positive session yesterday. We did end off the best levels yesterday. Asian equities are mostly lower, but China remains closed for a holiday. European markets are weaker. Treasuries are stronger across the curve, and the dollar is lagging on the yen, but seeing gains against the euro and sterling. Gold is up 20 basis points, and WTI crude is a bit weaker after that nearly 3% rally yesterday. And as we come to the chart of the S&P 500, you can see we're still testing near-term support around that 29.10 to 29.15 area. No real change to the view as of now. Secular uptrend remains in place. Breakout remains in place. So far, we've tested the breakout level and held it. Below that 29.10, 29.15 zone is support at the previous breakout level, 28.73, then 2800, and then the rising 200-day moving average is at 27.58. Resistance, again, in that 29.40 to 29.50 zone is where we're kind of feeling it out for now. Notice that we did get very close to that 29.40 zone yesterday before fading. RSI remains in bullish ranges, but the Chaikin money flow indicator has turned bearish with the recent pullback from the highs, and we're just keeping an eye to see if that materializes into something worse, as it did back in the March and April timeframe, or if we reverse quickly as we did when we briefly dipped negative on the money flow indicator back in August. Hard to say for now, but we're watching it play out. Futures are lower this morning, as I said, so we'll keep an eye on these support levels as we work throughout the day today. Your market in a minute, kind of the 5 main bullet points that I'm speaking about in my note to Chaikin Analytics members today. S&P 500 starts the fourth quarter on a positive note. We touched on that already. Small caps fall as the underperformance continues. I'm not going to include that chart that we've seen a bunch of times, the IWM relative to the SPY. Just not going to beat that dead horse today. But you can see on the right-hand side, look at the underperformance at small caps. We'll touch on that in a moment. Healthcare continues its relative advance. The U.S. dollar moves higher against the majors, as I said. We'll see if it is, in fact, regaining its footing. And as I said earlier, futures do point to a lower open. The major indices from a power bar perspective, Dow gets stronger. Yesterday, this was 8 bullish or very bullish stocks. Today, it's 12. Still no bearish or very bearish stocks. Dow, nice outperformance relative to the S&P 500, rallied nearly 80 basis points. S&P was up 30 basis points, 122 bullish or very bullish stocks, 64 bearish or very bearish stocks. So still nearly 2-to-1 in favor of the bulls. NASDAQ underperformed slightly, up 20 basis points, but the power bar ratio skewed 3-to-1 in favor of the bulls at 30-10. And here's that small cap deterioration just getting worse. Small caps down 1.34% yesterday in an up tape for the broader markets. S&P 500 up 30 basis points. 165 basis points of underperformance yesterday by small caps. That is a large number. Part of me wants to look for opportunities to see if this is getting overdone. Not quite there yet, The fall off yesterday was pretty intense, but it is something we are going to keep an eye on. 262 bullish or very bullish stocks, 354 bearish stocks. There's the downtick in bonds that sent yields higher. Oil rallies, taking the energy stocks with it. So according to the Chaikin Power Bar, large cap stocks are more bullish than small cap stocks, and the major indexes are in fact mixed. Now, your stock of the day today. PowerFeed subscribers in that email that I mentioned earlier will give you a stock every day for your consideration. It's based off of our proprietary Chaikin Power Gauge rating, and today's stock is Adobe Systems from the software and services industry group, which we have been bulled up on for quite some time. If you've been following along at home, you know that. Adobe has a very bullish Power Gauge rating. Closed at $275.49 yesterday, up over 2%, massive outperformance. And that very bullish rating is due to very strong earnings performance, very strong price volume activity, and very positive expert activity. Stock does have poor financial metrics, but when we roll up the 20 factors within these four main categories, we come out with a very bullish rating. So what do we have here? A very bullish stock and a strong trend in a strong industry group. Here's the ribbon at the bottom of the screen. You can see for most of the past 12 months, we've been either bullish or neutral. But for most of the past 12 months, as important or even more important is the relative strength against the SPY. You can see it's been a big outperformer and continues to be. So our dynamic duo is in gear. The market is in agreement with our model. When we check out the overbought, oversold indicator, you can see we're just coming out of an oversold condition here for Adobe. Stock came back and traded around the rising long-term trend line, is now starting to move higher. Chaikin money flow is, we'll call it neutral, but it's been persistently bullish throughout the past 12 months. And you can see the peaks on the bullish readings far surpass the troughs on the bearish ratings. Nice, steady uptrend, 4 quarters of positive earnings surprises. Now note, they don't report until December, so we have some time for the next earnings report. But Adobe is a large cap stock in a strong trend, in a strong industry group, in a sector, technology, which we'll look at a little bit later, that has been leadership. I like Adobe. I've liked Adobe. I think you can pick your spots when it becomes oversold or it's coming out of an oversold condition, such as now, to add to your Adobe position if you have one, or to open a long position in Adobe if you don't. ADBE on the long side today. Our sector tracker, looking at the movement of the major sectors over the past 5 days, we can see that healthcare, the group we've been talking about for a few weeks now as emerging leadership, is at the top of the list, up 1.3% over the past 5 days. Tech, number 2. And what's interesting here is that that lines up exactly with the power bar ratios at the sectors. Healthcare, number 1, tech, number 2. Energy's been strong with oil. Discretionary been rallying. This is the type of leadership we want to see in a bull market, as far as I'm concerned, right? Your alpha generating groups, tech, healthcare, and discretionary, outperforming. Industrials have been coming on of late, not really there yet from a relative trend perspective, but a bottoming process does appear to be in place. That new communications group up 51 basis points. Utilities and REITs down as rates move higher. The financials have been really the big surprise here. Rising rates should be helping the financials, and at this point they are not. The financials over the past 5 days are down 2.57%. The worst group, something to keep an eye on. As I said, when the market doesn't act the way it's quote unquote supposed to, or a sector doesn't act the way it's quote unquote supposed to, we take notice. Rising rates not helping financials. We're keeping an eye on that. Materials and staples have been 2 groups that we've been saying for a while. Fade them into strength. That continues to be the right strategy as far as I am concerned. Now, within financials, one of the bright spots has been, from a power bars perspective, has been the insurance services group. Over the past 6 months, though, the subsector has underperformed by nearly 6%. However, there's a possibility of a change, a trend here, as there are 16 bullish or very bullish stocks for only 3 bearish or very bearish stocks. So that is a very strong power bar ratio. The group is currently ranked number 3 of 21 subsectors that we track. It has moved down 2 slots over the past week, but still within the top 3. That's solid performance. Indicative stocks here: Unum Group, UNM, very bullish. Aflac, AFL, very bullish. And MetLife, MET, very bullish. Let's take a look at one of those here today. Here's Aflac. Very bullish stock. Strong trend, strong industry group. You can see a nice steady uptrend. Ribbon at the bottom of the screen tells us where the power gauge is and has been. And you can see, we've been predominantly bullish since mid-July. And what's interesting to me, though, is you can see what we saw earlier, right? We had it's been an underperforming group. And here's Aflac been underperforming, but it's really starting to maybe make the turn here, starting to see some positive readings on the relative strength. Not as strong as I would like them to be, but it is somewhat interesting, and we want to keep an eye on it. Closer to oversold than to overbought, but not there yet. And what's interesting as well is look at this intensity of this bullish money flow of late. That's the strongest money flow we've seen in nearly 10 months. So that's interesting. Money flow currently neutral, but it appears that money does seem to be flowing into Aflac. If we look at the chart, we're testing support at the rising long-term trend line. Also have some price-based support in the $45 to $46 level. This is kind of a tweener for me. If you wanted to make the case that you wanted to add Aflac to the portfolio, I wouldn't argue against it. The weight of the evidence does support to being long this stock. But for increased conviction, I want to see oversold, and I want to see stronger relative performance. So I can't argue with a long here in Aflac, but if it's a long, it would kind of be a smaller weight in the portfolio as far as I'm concerned. And then as it strengthens, look to add to it. But right now, it's not a high conviction long for me. Trending, yesterday's S&P 500 movers and shakers. GE gets a new CEO. Market like that, stock up 7%. Praxair traded at a 52-week high, so just some momentum there. No real news on Hess, kind of rallying with the energy group, up 4%. DaVita up nearly 3.5% as California lift a veto that's helping some of the dialysis companies, and COP up 3% as they are selling an interest in a business. I will note, however, that they did catch a downgrade this morning. Nectar down 7% on a short report. F5 caught a downgrade yesterday along with some other comm equipment names across a few different sell-side shops. So that stock down 4%. AAL down 4%. Viacom saw some lowered analyst estimates, and then the entire gaming group came under pressure after numbers came out of Macau in China that disappointed the street. If you look at Wynn, that was down big as well. So as I was talking about earlier, healthcare continues relative leadership. Here's a chart of the XLV relative to the SPY, and you can see the breakout and just continuation higher, momentum confirming the trend here as the RSI is in bullish ranges, and it's actually overbought here in the near term. So we're going to be open to the idea of a possible relative pullback. But what I did here today was I overlaid the sector power bar for the healthcare sector XLV, and you can see there are 38 bullish or very bullish stocks for only one bearish or very bearish stock. So that is it's the number one sector of all the sectors that we look at, and it just has a really intensely positive power bar ratio. I do view healthcare as a leadership group. I think that leadership is likely to continue, especially as some of the large cap pharma names start to outperform the market, which we're starting to see. And healthcare, technology rather, continues as leadership as far as I'm concerned. I'm viewing this XLK relative to SPY chart as a consolidation within a secular uptrend. We are above the rising 200-day moving average, and this ratio has not been oversold since last December. Kind of more neutral rating confirming the consolidation, but if we look at the power bar ratio for the XLK, we can see that there are 18 bullish or very bullish stocks and only 2 bearish or very bearish stocks in that sector based on the power gauge ratings in Chaikin Analytics. So I think that this is likely going to continue to the upside. It is the number 2 sector of the ones that we track. Finally, it looks like the US dollar might be finding its footing. It's regained the 50-day moving average, remains above the 200-day moving average. Notice during the pullback, the RSI did not become oversold. In fact, RSI has not been oversold since late January, early February. And now we have Chaikin money flow turning bullish as the UUP, the dollar bullish ETF, starts to move higher. What could be interesting here, though, is does it continue dollar strength help out that relative trend in small caps? We are going to keep an eye on that one. So if you like what you're hearing here every day, help us spread the word. If you could, share our link on social media, www.chaikinanalytics.com/PowerFeed-TV. We'll take you to our YouTube channel where you can watch this show as well as archive versions of past shows. And as always, sign up for the email. Get powerful, profitable stock ideas and more. ChaikinAnalytics.com youtube.com/PowerFeed TV. Special thank you to StockCharts.com and StockCharts TV for hosting. Have a great day, everyone.